Hello, and welcome to another update video about Bitcoin. Bitcoin is still holding its breakout posture there. We are starting on the daily time frame. Bitcoin still at 71K. You can see that we are still in this breakout structure, and Bitcoin did break out of this descending wedge pattern to the upside, reached the next resistance level. This is simply structural resistance now. And then the next one was reached after this one. He was broken at $67,500, and then the next move up. What I'll do in this video, I want to share with you the relevant micro support areas and how this could be traded, but that's entirely up to you. I mean, ideally for accumulation, everybody is positioned. Yeah, ideally for entering, let's say, long-term, short-term positions, this area was used. So it's all about only profit taking and risk management now. Surely the next buy the dip opportunity will come. People already ask me now, when is the next dip? I can only say we've had 2 months of correction, so I think it's time for a run, right? Surely dips are always possible, but when they show, there can be opportunities. What's not so easy to say is when they show, okay? So hope you understand the difference. So when they show up, there is a setup potentially, right? Especially in an uptrend, but there is no way to say that they exactly will show up at a certain point. We can identify some tendencies, we can identify resistance levels, but ideally these support zones are used. This is obviously the daily chart. This is our main support area between 50.7 and 61.7K. There was a lot of time to accumulate in this area for anybody who wanted to. And accumulation doesn't only mean long-term spot position. It can mean short-term spot position. It can even mean looking for entries for futures trades. Essentially, there are hundreds of ways how to trade these charts. You could have even used the wedge pattern that I presented as a breakout point. You could have even used the resistance level here as a breakout point. So the levels are respected and the levels are very well defined. Next upside target, provided we are holding certain levels that I'm going to talk about on the smaller time frame. Next upside target range around 85 to 90K. I showed you in yesterday's video how that's calculated. No need to repeat that. But yeah, the idea is still that we continue to climb higher. Anything else to say here on the daily time frame? Don't think so. Obviously, it is an overall bullish structure here. Trend continuation is always impressive how people talk about the bear market when there is a correction, okay? And now everybody's talking about like 100K plus again, just because we had a few green candles. Whereas on this chart, you know, it's been quite consistent and I haven't changed my perspective. And the idea was that there is no change to our bullish outlook until we break below 50.7K. Then, of course, at some point I have to change my perspective. But the advantage of the analysis here is that it gives you very clear levels. First of all, when I'm wrong, you should always trade as if I'm wrong, which in this case so far is not the case, but you should always be prepared for that. But then at least I give you levels, right? I give you levels where things break. And yeah, I'm sure if we get a more substantial breakout, then people will start to talk about 1 million again, which is quite funny. And then they will all panic when it's going back, let's say in the next bear market, whatever. Let's go to the shorter time frame. Here, by the way, some of these updates were published on our Twitter channel, X account. Already earlier today, I published for Gold members additional updates. So if you want to stay up to date, feel free to check out our Gold membership on our website. But if you want to see some additional updates, some of them are also published on Twitter, like this one yesterday, 8 hours ago, in which I provided the latest support levels for Bitcoin, for example. Just please make sure that you follow the correct account. Every week there is one video only published on X. On Saturday it was CKB. Just saying that because a lot of people asked me for a CKB update yesterday on YouTube. Did say, look, there's one on X already. And yeah, feel free to check it out. There's plenty of other stuff as well, which might be useful. Now, no waste of time. So let's go here to the 1 hour chart. Here you can see that the fourth wave likely bottomed on the 1st of May. That is one of the scenarios. In the other scenario, we could just be in a high B wave. Does it matter which one it is? I can tell you no, okay? Because it's all about how you manage that from a tactical point of view. Some people want to know about probabilities and everything. Well, I can't really give you probabilities because they are too dynamic and very subjective. What I can give you is levels. And I can tell you that in these scenarios, what we do, we track the two potentials. One is a white count, which warns us that we could still see a breakdown. Yeah, easily possible. However, it needs to break support. Until we have a break of support, there is absolutely no evidence that a top of sorts is in place. Okay, and I will give you this latest support area. These are adjusted several times throughout the day for our Discord members. And also you have access to our live charts 24/7 as silver and gold members. And there you can also get access to Discord, of course. But the idea is that there is a count in which we could obviously break out. Well, we've been talking about that already. So if you are if you followed over the last few days, over the last few weeks, then you know that here on the 1st of May, the low could have been in, but that evidence was quite thin. It's thickening, okay? The plot is thickening. And what I did over the last few days, also over the weekend, is to give you the support levels that need to hold, that we can focus on for higher prices. I always give you the level that needs to break as well. I would not short in the bull market. I've said that many times as well, for a reason, okay? So it's all about being I would say smart about it. But I mean, not saying you couldn't short, you can short, but just be aware that the pressure in a bull market is rather to the upside. It's rather to the upside. And those rallies, if they happen quickly, and you get just wrecked, it's just what it is. So therefore, I think part of a sound strategy in a bull market should be not to short, because the risk is higher and, the reward is kind of limited when you're short trading, whereas it is much more productive to go long, right? When there is a setup, as there was in the larger support region, as there was here, okay? And we've even tested, I think, a couple of times the small one as I moved it higher. But either way, the idea is, even though I have a short-term bearish count, as in the white count, this has certainly become less likely. I won't take it off the chart, but it has become less likely. Now, does it really matter which one it is? No. I can tell you it doesn't actually, because it's all about how you manage that from a strategic point of view. So one way to deal with this would be, for example, to obviously take some profits maybe, if you bought down here, because the profits already have been quite interesting. Take some profits here now that we are in the target range, but you might not want to take too many profits because it could still go up further. And then possibly if we get a break of support, then maybe take some more profits, because as we get a break below that 65,740 level, it would indicate a larger top, okay? And then just adding more as we get back into the lower support region. That would be, if someone's trading that short term, I think a sound strategy. I'm not telling you to do this, but this is sort of how I would see this, okay? So it doesn't always trade as if it doesn't matter which scenario is playing out. Have a plan for both. That's the thing. It's not so much about, okay, is it the yellow count or the white count that's playing out? It's about having a plan for both. That's why I show you both potentials, not because I say this one is playing out or the other one. That's very, I don't know, that's very simplistic thinking, because the market could do literally anything. Out of the infinite potentials that could happen, I show you two likely scenarios, and you know the level between, and then you know when one breaks and likely the other one is taking control. So you can then transfer that over to your portfolio and what that means for you and your portfolio, your risk appetite and so on. That's the thing, to give you objective analysis, not, oh yeah, I said this because whatever, I'm right. And that's all ego thinking. It's not about being right or wrong here at all. It's about helping you understand the market structure. So that is why I give you these boxes to understand what is support. You can position yourself against these boxes. We've had a few dips, okay? So yeah, there should be the next dip at some point. At the moment, in the very short term though, if it's the yellow count, which is really the bullish breakout count, I would like to see that yellow third wave get actually minimally to 73,816 before it forms a top. Yeah, if we now top earlier, it might rather be maybe something different. But looking at the very short term, it looks a bit like a bull flag here, or bullish pennant. So it could very well get one more high here. And that would be what I would like to see, because then it gets to the next upside fib level. And then from there, the market has the next chance to pull back, or from 76,460. So no top in place until we break support. I would focus on higher against support, even though we're now quite stretched, but in the third wave, actually nothing unusual there. Yeah, yellow wave 3. So that's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.